Dear Techies, in a decisive move underscoring its commitment to artificial intelligence, AI, Alphabet Incorporated, the parent company of Google, has announced plans to allocate approximately $75 billion in capital expenditures for the year 2025. This substantial investment represents a 43% increase from the previous year's spending and significantly exceeds Wall Street's expectations of around $58 billion. The primary focus of this expenditure is to enhance the company's AI infrastructure, particularly through the expansion of data centers and the acquisition of advanced servers. These enhancements are intended to support core services like Google Search and foster the development of AI platforms, including the ambitious Gemini project. Strategic allocation of capital expenditures. Alphabet's chief financial officer, Anat Ashkenazi, detailed that the majority of the $75 billion investment will be directed towards technical infrastructure, with a significant emphasis on servers, followed by data centers and networking equipment. This strategic allocation aims to bolster the company's capabilities in AI research and development, ensuring that Alphabet remains at the forefront of technological innovation. CEO Sundar Pichai emphasized the necessity of this investment, stating that it is crucial to accelerate progress in AI and to strengthen the company's core businesses. Market reactions and investor concerns. Despite the strategic intent behind this substantial investment, the market's response has been mixed. Following the announcement, Alphabet's stock experienced a decline of approximately 9% in after-hours trading. This reaction reflects investor apprehension regarding the scale of the expenditure and its potential impact on short-term profitability. Analysts have expressed concerns about the company's ability to monetize its AI investments effectively, especially in light of slowing growth in its cloud services division. Comparative analysis with industry peers. Alphabet's commitment to AI infrastructure is part of a broader trend among major tech companies investing heavily in artificial intelligence. For instance, Meta Platforms has announced plans to increase its capital expenditures to between $60 billion and $65 billion, while Microsoft anticipates spending approximately $80 billion on AI-enabled data centers. These investments highlight the industry's recognition of AI as a pivotal area for future growth and innovation. Implications for the AI and cloud computing landscape. The substantial investments by Alphabet and its peers are poised to have significant implications for the AI and cloud computing industries. Enhanced infrastructure will likely lead to more advanced AI models and applications, potentially transforming various sectors, including healthcare, finance, and transportation. However, these developments also raise questions about market saturation, the pace of technological advancement, and the ability of companies to achieve a return on such large-scale investments. Conclusion. Alphabet's $75 billion investment in AI infrastructure underscores the company's strategic focus on artificial intelligence as a cornerstone of its future growth. While this move positions Alphabet to be a leader in AI innovation, it also brings to the forefront challenges related to investor expectations, market competition, and the effective monetization of AI technologies. As the tech industry continues to evolve, Alphabet's approach will be closely watched as a bellwether for the broader implications of large-scale investments in artificial intelligence. Thanks for listening this audio podcast. For more such podcasts in future, please don't forget to like, comment, share and subscribe.